Greece has secured its €130 billion international bailout. In return, Greece will aim to reduce its debt to 120% of its GDP by 2020 and allow EU monitors to oversee the country's economic management. The deal also means that private holders of Greek debt will take losses of around 53% on the value of their bonds. Greece will also have to amend its constitution to give priority to debt repayments. Athens will also have to set up a special account managed separately from its main budget and ensure enough money to service its debt for the coming 3 months. The Greek parliament is expected to vote on the bailout on Wednesday.
We have reached a far-reaching agreement on Greece's new program and private sector involvement that will lead to a very significant debt reduction for Greece and pave the way towards an unprecedented amount of new official financing being provided by the EFSF to secure Greece's future in the euro area. This will give Greece the time needed to follow a credible path of fiscal consolidation and structural reforms and allow a return to sustainable growth and employment.
I've learned that marathon is indeed a Greek word. But in the end, we came to an agreement. It's a very far-reaching and important agreement. And the Commission welcomes this agreement over tonight, which will substantially reduce the debt burden of Greece and will help to reform her economy and administration.
Significant progress has been made, and the combination of these significant efforts plus the ambitious programme with a clear focus on competitiveness should really give enough space for Greece to restore its competitiveness, to improve its debt sustainability, and to demonstrate that with good and solid and rigorous implementation, checked on a regular basis by the various partners associated with the programme, it can get back on track. That's very much the hope that we have, and as I said, I will take the matter further to the board of the IMF during the second week of March.
We're now joined by Will Hobbs, Vice President of Research at Barclays Wealth. He joins us from London. Will, thanks for chatting with us right here in Global Business Report. Greece may have finally secured the second bailout, but the country remains accident-prone, with many economists saying Greece is unlikely to cut its deficit as targeted by 120% of its GDP. Do you subscribe to this view that a Greek tragedy is far from over?
Yeah, I mean, it would certainly be unwise to say that life is going to be rosy from the Greeks from here on in. They've got a very, very tough hill to climb still. The Troika have announced that they are going to be having they're going to have a round-the-clock presence on the ground in Greece, apparently to improve the workings of Greek bureaucracy, in their own words. So that might help Greece to stick to some of the bailout plans. However, with this and all the other safety measures installed, it's still a tough ask, like I say, for Greece to actually stick to their end of the bargain. And even with the PSI, the debt burden is going to be very chunky, like you say. So I don't think we'd say that Greece is out of the woods by any measure.
Well, what about Greece's economic growth? You know, these spending cuts will push the country deeper into a recession, isn't it? Is there a way out of this for Greece, or are we staring at a prolonged, decade-long recession?
I think it's difficult to call a decade-long recession. I mean, I really hope not. But again, I suppose it's difficult to rule out, given the sort of parlous state of affairs for Greece at the moment. The economy, trust in the state, looked to be at a very low ebb, and even lower ebb than it was possibly before the crisis. We've seen the riots recently, and it looks like public order is going to be a problem for some time to come, and tax collection is going to be a problem. So I think that they might be helped by a stabilisation of the rest of the world economy. Some tourist bucks might prop up the economy a little bit, but like I say, it's going to be a tough ride for Greece from here on in, and it's difficult to call an end to it, really.
Tough to call an end to it. Well, I agree with you on that. The reports released by EU and the ECB and the IMF suggest Greece will need extra relief to cut its debt. So Is there a possibility of a third bailout in the future? That's something that's got the market worried as well.
Yeah, it's an interesting question. Again, we'd hope not, but it's difficult to rule out. I think the important thing to note here is that what the European politicians have done is bought themselves time over last summer, and this most recent bailout package buys them a couple of quarters where probably Greece won't default over that time. And so what that should also do is buy them time to increase, beef up the defences, so to speak. And that comes in the form of the ESM, which will come online in the middle of the year. Whether that gets merged with the EFSF and how big the bailout funds will be by that time is still apparently open to debate, though it does sound like the Germans are relaxing some of their previous opposition to raising the limit on the ESM. And so I think the important question to ask is not whether there will be a bailout package, but whether some of the stakeholders who now seem so invested in Greece will care as much as they do now.
Well, the other piece in this entire story is, of course, the fact that Greece is expected to launch its bond swap program on the 8th of March. Athens will restructure its debt with private bondholders and avert a default. Chances of anything going wrong here? And have we steered clear of a default scenario here as well?
Again, I wouldn't want to rule it out. I think we probably see that the next major hurdle for Greece and its investors is actually probably the elections. It sounds like the two major parties, PASOK and New Democracy, are actually losing share of the voter intentions. They're under 50% now on the sort of numbers that I saw this morning, possibly even lower than that. And these are the parties that have signed up to the agreement, essentially. And so if support for them ebbs and you get some of the more sort of further to the right or left parties winning a share of the vote who haven't committed to some of the agreement, then I guess there's the threat of Greece falling off track sooner than had been expected.